Good afternoon, students. Welcome back. I am Arpita Agrawal, Academic Officer, Directorate of Academics, along with Mr. S.P. Rao, an expert in indirect taxes. He is a senior faculty with over 15 years of experience in teaching indirect taxes, and he has also authored 2 books on indirect taxes. In this part of webcast, we will be dealing with indirect taxes for tax laws old syllabus and tax laws in practice new syllabus of executive program. Tax laws old syllabus contains indirect taxes for 40 marks of where service tax is of 20 marks and VAT is of 20 marks. While in the tax laws in practice new syllabus, indirect taxes is of 30 marks for VAT and service tax. Now I'd like Mr. Rao to please give students a brief overview of the indirect taxes part of the syllabus, and then we can take on with the queries of the students.
So thank you very much. Hello friends, my name is S.P. Rao, already introduced. So thank you very much ma'am, and it's my privilege to address all of you. You know, indirect taxes is a growing subject. It's growing. Already you know, service tax and VAT was introduced in India, and all over India it is applicable. And with the lot of growing, there is a lot of importance, and particularly you might be hearing that the Goods and Service Tax Act is in the offing. So the knowledge of these in particular, VAT and service tax, will be helpful to you when you get at the final level. And of course you may be aware the indirect tax portion is very much there at final level also. It is for 70 marks, which covers in addition to VAT, service tax, and of course there is CST, central excise, and customs also. So at executive level, whether it is old syllabus or new syllabus, the coverage is almost same, but the only thing is now it is for 30 marks and earlier it was for 40 marks. That's a major difference. And number 2, if you look at service tax and if you look at VAT, these two are different entities, though both are indirect taxes. So what is the major difference? The major difference is VAT is a state subject and service tax is a central subject. So service tax is levied under the central law. Of course, right now only Finance Act. Under Finance Act 1994, service tax is being imposed. And the whole of the collection, levy and collection, everything is centralized. And you know, it is under entry number 97, residuary entry. You study at your GCL level, Article 246, 7th schedule. There are 3 lists, you know, union list, state list, and concurrent list. This is the last one, 97th entry. Under this residual entry, the service tax is being imposed. Right? Whereas if you look at VAT, it is under state list, entry number 54. That is one major difference. And the corollary follows. The collection is by central government as far as service tax is concerned, whereas VAT is under state law, State VAT Act. For example, Delhi VAT Act, Haryana VAT Act, Punjab VAT Act. Each state legislature has enacted its own VAT. There is a possibility that there is no uniformity. Earlier, they planned to have uniformity, but slowly they are deviating. So, Punjab VAT Act and Haryana VAT Act may not be same. There should be some differences because it is a state subject. States are autonomous. You know, India is a federal state. So, under entry number 54, VAT is being introduced. Levy state-wise, state levy, and also collection is also by state government. So, this is a major difference. But let me tell you, maybe you are reading from books and maybe you are having access to so many things, but 3 things I would like to highlight. Number one, indirect taxes are taxes on domestic consumption. So you have to note down very clearly. So you should understand this very clearly. Indirect taxes are basically taxes on domestic consumption. These are consumption based taxes. Consumption of goods, consumption of services. Say for example, when you consume goods, you are paying excise duty on their manufacture. You are paying sales tax, maybe local or interest rate on their sale. Manufacture, excise, sale, sales tax, that is VAT or CST. And services, if you consume services, you are paying service tax. So like this, it is a consumption tax basically. And it is on domestic consumption. It's a very important point to note. Domestic consumption here means consumption in India. So if the consumption of goods or services happens to be outside India, what happens? No tax is imposed in India. If at all any tax is already collected to that extent that is refundable, you will get the refund. Under VAT you study zero tax. What do you mean by zero taxation or zero rating? Same. Say for example, how zero tax operates. You purchase certain input in India locally and paid VAT and you took credit, ITC. And the same is processed and exported, or the same is exported without processing. If it is a tradable commodity, you resell. If it is not such, if it is an input, you process it and get a final product and export it, whatever it is. So, on export, there is no tax. Why there is no tax? Because you know, under section 6 of central sales tax, which is operative, which is applicable all over India, export sale defined under section 5.1 read with 5.3 is exempt. So export sale is exempt. So you are exporting, when you are exporting, you are not paying any sales tax. But at the same time, and whatever tax you paid at the input level on your purchase, that is tax on purchase, that will be refunded. You can get refund, or you can use that ITC, input tax credit, for some other purpose. So at input level, your tax was zero because either you got refund or you were allowed to use it for other purpose. And at output level, by virtue of section 6 of CST Act, there is no tax. So it is zero tax. Zero tax is different from exemption. So what happens in exempted sale or exempted goods? Input tax is there, output tax is nil. Only value addition is nil. On input purchases, your tax is there, that becomes a part of your cost because ITC is not available on that. But only at the output level, the tax is nil. So there was a tax at input level, no tax at output level. That is a case of exemption. And there is no tax at the input level, also at the output level, that is zero. Neither at input level nor at output level, then it is called zero tax. You should be very carefully noting down the difference between exempted sale and zero tax sale. And very relevant for examination also. On and often you will be getting in your examination. And then again, indirect taxes are domestic consumption, which means if the consumption happens to be outside India, there is no tax. Even that happens in the case of excise and customs also, you will come to know when you reach the professional level. And then one more important feature of indirect tax is, you can say concurrently, you can make it, that is, indirect taxes are destination based. Destination based. And if you look at indirect taxes as they are today in India, central excise is destination based, service tax is destination based, VAT is destination based, even customs indirectly is destination based. So indirect taxes are destination based, not origin based. But in India, right now, we have only one tax which is origin based, that is CST Act, Central Sales Tax Act, and that is going to be removed, or at least that is going to be, its effect is going to be nullified, because CST already reduced by 2%, now only 2% CST is payable in India. Either they make it zero or they will remove it. Mostly they are going to remove it by virtue of this GST Act. So, what do you mean by destination based taxation is of two types. So particularly I am talking about indirect taxes. Don't apply the principles to direct taxes, because they are like North Pole and South Pole. If you look at direct tax and indirect taxes, one is North Pole and one is South Pole. Which is North, which is South, don't ask me. Okay, so indirect taxes in particular I am talking are destination based. Means the taxation system may be at the origin or maybe at the destination. And prior to Second World War, most of the countries were taxing on the origin base. Means something is originating or moving from. So collect tax, impose tax and collect tax. But what happened is, with the rigors of Second World War, economic depression and so on, and inflation, so on and so forth, and the world has witnessed a lot of trauma or difficult situations, and it realized the taxation should be destination based. What do you mean by destination based? Let me give you an example.